quick. I just had a client that was denied from another lender because they was coded as a manual underwrite. I told y'all, anytime you start a mortgage process, some lenders have something that is called a overlay, which means if you don't have a 620, you could possibly be denied. If you don't have a 640, depending on the program that you apply for, you could be denied. And in this case, this client was denied because they was a manual. All lenders don't do manual underwrite. What is a manual underwrite? A manual underwrite is, say hypothetically, you may have 1 or 2 late payments in the past couple months, or you may had a charge off last year, and the system just kind of don't like your file, and it's going to require a little bit more documentations. And what I mean by more documentations is, say for instance, you had a late payment that was 3 or 4 months ago. Underwriter's going to ask you, okay, what caused that late payment and what have you done to get back on track? A lot of lenders, they don't have time for that. It's like, okay, if you're a manual, we can't do it. Well, this client now is approved. I told y'all, some of y'all been told no when you should have been told yes.
So technically she's right. Manual underwriting is a process that we as lenders use whenever you do not receive a automated approval via the underwriting systems that we use. I would caution you, however, to really make sure you know what you're doing when you move forward. On this side of the transaction, either lenders or realtors, this is how we make our money. I wouldn't be who I am if I didn't caution you in that if you were denied via the automated process and we have to go to a manual underwrite, just make sure you're not forcing yourself into a home based upon your wants. And that manual underwrite that you may qualify for is one in which you're getting and you can actually afford the home, not just qualify to get into it, but afford it. Hey guys, Robert here. Welcome back to the channel. So many times we run into situations like this where you do find people that deal with the wrong lender, deal with the wrong professional, and if you don't have all of the A boxes checked, they just push you to the side. And so there is a way for you to be able to qualify for a home, but everything I just aforementioned, just make sure you understand those things. Take a few seconds, like the channel. It really helps and I appreciate it in advance. And just by the way, I'm a lender. My NMLS license number is 180100. So if you need help with any type of residential financing, my contact information is in the top pinned comment and in the description of this video below. So as we move forward, the goal today is to listen to different scenarios like this so that if you are a potential home buyer, be it first time, move up, refinance, what have you, anything with residential real estate, you need to know and understand that your lending professional knows what he or she is doing, because not only can you be denied for a loan, in a lot of cases, a lot of you guys are paying more than you should actually be paying. Let's check it out.
My client got denied for a home. Yeah, it happens. So as much as we are on these apps and social media and we're showing sold signs, we're showing approved, we're showing people moving into their new homes, there are just as many of those individuals that we could not get approved, that were denied for home loans. And I want to come and talk a little bit about the number one reason why we are seeing individuals be denied for home loans. Debt to income ratio. How much are you paying monthly on the debt that you have, opposed to how much you are bringing in on a monthly basis, which is your income? So some of the things that go into play when we talk about debt to income ratio, the biggest one that I am seeing lately are car loans. People have car loans upwards of $700+ a month, which is being taken into account in terms of how much they are bringing in as far as their income is concerned. And so what that does is that depreciates your buying power. So you're not able to either afford a home loan altogether, or you're able to afford a loan, but it's way less than what you anticipated, or less than what we have in the market at this particular time. Other debt that's factored in would be credit card debt, child support, alimony, student loan debt, any type of personal loans. Those are also part of your debt. So what I like to tell people is, we all need vehicles to get around. But if we could try to minimize some of that debt, and if it's a car that you need, if you could potentially purchase it after you purchase your home. Car loans, they could care less about what your debt to income ratio is. But for a mortgage loan, that is very critical in you getting approved and how much you could potentially get approved for. So if you're looking to buy a home, know that, a denial is just a delay.
Okay, I'm going to take a few seconds to do what she did and gather my thoughts so I don't say the wrong thing. Give me a second. Yeah, I got it together. I agree with her. Debt to income ratios is a metrics that's used for lenders to help keep you, the buyer, in the right zone. And that tool is used to tell the future investor that when we made this loan to you, you have the ability to repay it over a period of time. Car loans, especially today, are crazy. Some of these car loans that I'm seeing, and I've literally personally have seen a $2,200 car loan for a truck, just regular people. And it blows my mind that folks sign up for these things. That payment is going to negatively affect how much you can possibly qualify for, as she said, or altogether cancel your approval. But here's what I'm saying. You, as a potential buyer, have to pay attention to the debt to income ratio, because in essence, what it's saying is this: we're taking your gross income. And remember, we live on the net. We don't live on the gross. But if you're a W-2 employee, or if you have fixed income coming in, we're going to take the gross income and assign a ratio based upon the monthly obligations that you have, not all of them, the ones that show up on the credit report, and the proposed house payment, principal, interest, tax, insurance. Take that amount and divide that into your gross. And for, let's say for conventional loans now, you could go up to 50% of that number. FHA, 55 or 55.6%, depending on the USDA program that you're dealing with. We'll call it 42%. So you got to pause right there. Is that the best thing for you? Or if your debt to income ratio is too high, from a buyer's perspective, that is an indication that you need to buy less home. And we have to get out of the notion that all homes are at the median sales price for whatever year it is that you're watching this video, because that's not true. If your debt to income ratio is high, no, that is a red flag for you having problems down the line. Why? Because insurance and taxes are the portion of your payment that do not have a cap on it. They can go up, they can go down. Over the last couple of years, they have gone up because of inflation and all of the money that has been printed. I don't want you to think that this is just something coming out of thin air. There's a reason for everything. You have to have some wiggle room and not buy a home like it's a dream. The reality is you need shelter. How much shelter do you need? The debt to income ratio helps you determine what that is. Don't let a salesperson talk you into buying something that you can't afford. Listen to the numbers, because they don't lie. Let's move forward.
Man and I just got denied for a home loan. I feel like I failed a test. Why do I feel like I feel like I failed my driver's license? Okay, that's what it is. Like, the instructor got out. I failed the parallel parking. So for those of you who've been following the podcast for the past 2 weeks, we have been in escrow on a home in California. I thought your queen was going to be finally a homeowner at the age of 43. And then I didn't even realize this was possible. Have you guys ever even heard of this? I talk about this today on the podcast. Go and listen. We went into escrow. Our loan officer allowed us to go into escrow and said, oh, you're approved for X amount of money. You're approved for this big loan. I was like, okay, great. I've been working so hard. I have a great credit score, show to Shmano. We work 24/7. I built my business for 9 years. She's like, oh yeah, you're approved for this. We go into escrow. I mean, I have to now hide from this realtor here in LA and the seller. And we get not a phone call, we get an email basically saying, so sorry, we're not gonna be able to help you become first-time home buyers. You don't have a home loan. Okay. How can they allow you to go into escrow and do that? And by the way, if you look, I can afford a house in another state. Thank you, God. Very, very blessed, right? But if you are a younger person living in New York City specifically, or Los Angeles, the two most expensive cities in this country, how did you buy your first home? And just be honest, did your parents pay? I think my mom's going to have to co-sign for our house, even though it's atrocious. Our income. Apparently it turns out banks don't like that you own your own business.
So love the energy that she's bringing in the video. And you know what? Nowadays, I don't know if these things are accurate or not, but we can still learn from what she's saying. And this happens a lot. Unfortunately, this is why it's very important for you to choose all of your partners carefully. In fact, story time, real quick. This past week, dealing with a realtor that had a client that in essence is a 1099 employee. As soon as you go from a W-2 employee to a 1099 employee, the clock resets and you have to have a 2-year history of receiving that type of income with proof of that with your filed and received tax returns from the IRS. And that's very important because if you want to go with a traditional FHA, VA, USDA, or conventional loan here in these United States, your 1099, that is the minimal test. Now, there's something called a non-qualified loan that we have and we deal with, but in essence, even with a non-qualified loan, someone with a 1099 income, but in specific situations, the minimum time you have to have been on that or in that employment receiving income is 1 year, and we would be able to take a percentage from that gross receipts on that 1099 if everything else is in play. But what happens is they'll pull credit. Who am I speaking of? All of these so-called lenders out here. They'll pull credit. If you have good credit and everything looks good, then they'll say you're pre-approved because they're trying to mentally lock you in. Now that you're watching this video, that's a fault of yours and the lender because you have to beware. You're the buyer and no one has your best interest in mind other than you. And so I say all that to say this. You want to look down in the description. At minimum, get the checklist. That will let you know the minimum documents that you need to have before you reach out to any lender. So what probably happened in her situation, she mentioned a spouse. So if they're both looking to qualify in one of the most expensive markets, LA, or like she said, New York, or wherever you're buying, if it's very expensive, you need all hands on deck. You need all that income. So I'm assuming that one of them, they could not use that income to help qualify because maybe the time of business was not met, the 2 years, or the lender that they were dealing with, if they had a 1-year history, did not have the type of products that aren't traditionally there. It happens all the time. Back to the story. I told said agent, hey, this person is not going to qualify. But they left me and went a couple of other places. The places told them, hey, they're qualified. No, they're not. They write a contract. They go through all the motions only to find out that this person was never qualified. Just because you have a lending license does not mean you know what you're doing. Choose wisely. Here's the last thing I'll say. How do you find somebody, Robert? Well, videos like this. We got over 300 videos on the channel. Go and listen. Close your eyes and just listen and say, you know what? Does this person sound like they know what they're talking about? Then try to go find some proof via reviews. But ultimately, you have to reach out and let your spirit guide you. Because more times than not, it'll lead you in the right direction. And then apply and let the numbers do what they need to do. But ultimately, don't lie to yourself. Let's check out this next video.
My loan was denied. Denied. I have never had that happen before. A new lender called me up earlier this week and was like, unfortunately, we can't make it work. And I'm just going to scoot you real quick to clarify. On day 3, I told you that I was pre-qualified, and I meant that. But I always got to shop around for mortgages. You don't know who has a cheaper interest rate. I'm not beholden to any of these lenders. Okay. And I know this next part might make me look like a Karen in somebody else's story, but I'll tell you what me and Karen have in common. We ain't never confused. There is no miscommunication because somebody going to explain it to me. It might be you. It might be a supervisor. Because what you mean denied? Then she tell me my debt to income ratio is too high. Now, is there a possibility? Absolutely, because this is a new loan product, but I know that I only have one mortgage on my record and I got a tenant. So I'm not understanding. She says it's 98%. 98%? Now, I'm genuinely upset because on some real ish sis, how could 98% of my gross income be going to debt? And why would I send you my taxes saying I buy and manage properties for a living, have the audacity, even if that crazy situation was true, to apply for a loan? So remember, my Karen mentality is saying, walk me through it. I'm not going to go to your supervisor yet. But just tell me how you got the numbers. Maybe it's more to teach it. Explain your work. We go through the whole app wrong. And I'm not even mad that the app was filled out wrong because, baby, mistakes happen. I'm mad you didn't ask me no questions. You didn't ask for any clarifications as to why my debt to income ratio would be 98% and I would have the audacity to apply for a loan. And you didn't even come up with no solutions. You just told me no. And if I was a different one, if I was a different chick, I would have taken that no to heart and left. I wouldn't have asked for clarification. I wouldn't have asked for help, and I wouldn't have my house. So let this be a lesson to you all. Miscommunication is only cute in romance novels. Matthew said, "Blessed are the peacemakers," and all of this confusion is disrupting my spiritual peace. So when I ask you all these questions, when I say you're going to have to explain it to me, what I'm trying to do is unlock blessings for the both of us so that we can create peace in our world together. And also, and pray.
I love it. I love her videos. Very successful investor, by the way. But you know what? Most of you are not like she is as far as being seasoned and gone through the mortgage process from an investor standpoint and knows her numbers and what's supposed to happen. So first of all, shopping, that's something that a lot of you guys need to do that would prevent a lot of what we just went over in this video. I'll say this. When I got into this business, I used to manage a branch. And what that entailed was this. I had a budget. We had to lend money. Then I also had to underwrite said loans. I was responsible for that. And I had bad debt and profitable loans. Really ran the business. At that time, I was trained in actually physically taking an application. The application now is called an URLA, Uniform Residential Loan Application. It used to be called the 1003. Same document. And I said all that to say this. Most folks from 2015 coming forward have no idea what the reasoning behind the boxes are. They're just filling in the blanks. It's like you go to Burger King or McDonald's or wherever you get your hamburgers. They're just order takers. And so this is why you either get denied when you shouldn't because they don't know the programs, or they don't know how to calculate your income because you're business for self, or you have somebody like this video that we're reacting to, a seasoned investor that understands there's no way that my debt to income ratio is 98%. Why would I even apply? Well, as a lender, I've seen some people apply, but I get what you're saying. Not you, right? I can remember another story. I'll make it very brief, but I have a very successful client that we've helped a couple of times. They went to a builder. All these builders, they want to capture you from the front door all the way through. And I try to tell you guys that's not what you want to do. As a result, the way I was introduced to this person, they found me on YouTube in a completely different state, watched a lot of the videos, and were able to ascertain that, you know what, this guy sounds like he knows what he's talking about. Reached out, had a consultation initially, and I was able to get their corporate tax returns and understand how the money flows. As a result of that, I was able to do 2 loans for these folks before the builder figured out. But my point is this, it happens all the time. Just because you see a pretty face or a handsome face and it's all suited and booted, they have all of the trappings of someone that seems successful and know what they're talking about. Most of these folks don't have a clue. You have to ask questions. What questions do I ask? We're sticking with debt to income ratio. You should know what that is. Take all of your bills that you have on your credit report. How do I get that? Go to myfree or myannualcreditreport.com. That is a government entity, the CFPB, and you can get a free copy of your credit report from the 3 agencies, not bureaus, agencies, Equifax, Experian, TransUnion. And you can see what's on your credit. That's a whole nother video. But once you see those things, you can see what the minimum payments are. And those are the minimum payments that we're going to look at. As a bonus, for those of you that have stuck around, your bank statements is more telling. And a lot of you all out there have buy now, pay later accounts that do not show up on your credit report. And those are undisclosed liabilities. It's tax time. A lot of you all have tax liabilities that you may have to pay now. And there's a process for that in which you can accelerate where you have to factor in those payments. And just some of the things that I'm mentioning to show that you have to choose the right lending partner, because if not, you will be denied or be put in the wrong program. Because she knows what she's doing and she's a pro, not only I'm sure did she get the best rate at the time for the product that she's dealing with, but as she says, she's also approved. So if you like to get onto the property ladder and you want to do so the right way, again, my contact information is is in pinned comment or the description of the video below. My time is up, but I thank you for yours. As I always say, guys, let's be good to one another. Let grace abound. Watch these next 2 videos. They will help you on your journey to home ownership. And until the next time, indeed, y'all stay blessed.